Welcome to Market Updates HQ, your command center for navigating today's volatile markets. Every week we break down what's really happening in macro, crypto, Bitcoin, AI, and the commodity forces that matter most to your financial future. The stuff that mainstream finance is afraid to cover because it's too uncomfortable, too contrarian, or too real. If you want to understand what's actually happening with your money, before everyone else catches on, hit subscribe. We bring out new episodes every week. No fluff, no hype, just signal. Let's get into today's episode. There's a pattern buried inside Bitcoin's history. It has played out 3 times, each time more powerful than the last, and most people, even people who own Bitcoin, have never truly understood what it means. Today I'm going to walk you through that pattern, the data, the history, and most importantly, where we are inside it right now. Because if you understand this, you will never look at Bitcoin the same way again. Let's go back to the beginning. When Satoshi Nakamoto designed Bitcoin, he built in one of the most elegant economic mechanisms ever created. Every 210,000 blocks, roughly every 4 years, the reward paid to Bitcoin miners gets cut in half, permanently, irreversibly. This event is called the halving, and it has happened 4 times now. First halving, November 2012. The block reward dropped from 50 Bitcoin to 25. At the time, Bitcoin was trading at around $10. Most of the world had never heard of it. It was a curiosity, a hobby project for cryptography nerds. Within 180 days of that halving, the price had risen to $126. Within 12 months, Bitcoin had risen over 9,000%. 9,000%. The people who understood what had just happened, the supply of new Bitcoin entering the market had been permanently cut in half. Those people changed their lives forever. Second halving, July 2016. Block reward dropped from 25 Bitcoin to 12.5. Price at the time, around $650. Skeptics said the halving was already priced in. Nothing would happen. Within 12 months, Bitcoin had risen 294% to 2,560. And it didn't stop there. By December 2017, Bitcoin hit nearly $20,000, from $650 to $20,000 in 18 months, after a halving that was supposedly already priced in. Third halving, May 2020. Block reward dropped from 12.5 to 6.25 Bitcoin. Price at halving day is around $8,700. By March 2021, less than a year later, Bitcoin had reached $60,000. By November 2021, it hit its cycle peak of $69,000, an 800% move from the halving day price. 3 halvings, 3 explosive moves, each one following the same basic pattern, a supply shock, a period of accumulation, and then a price discovery phase that caught the majority of people completely off guard. Now, here's where it gets seriously interesting. Fourth halving, April 20th, 2024. Block reward dropped from 6.205 Bitcoin to 3.125 Bitcoin. The daily supply of new Bitcoin entering the market was cut from 900 coins per day to just 450 coins per day. 450 Bitcoin per day. That is all the new supply this network produces, for the entire planet. And here's the critical number that changes everything about this cycle compared to everyone before it. Bitcoin ETFs, the institutional products launched in January 2024, are currently absorbing more Bitcoin every single day than miners are producing. Every day. More demand than new supply. And that demand is not going away. We have never seen this before in Bitcoin's history. In every previous cycle, retail investors were the primary buyers. This cycle, the buyers include BlackRock, Fidelity, sovereign wealth funds, nation-state treasuries. These are entities that do not panic sell. They accumulate for decades. Now, I want to be completely honest with you here, because 2025 threw something unexpected at us. For the first time in Bitcoin's history, the year immediately following a halving finished slightly in the red. The classic post-halving bull run that everyone expected in 2025 did not arrive on the historical schedule. And that has caused a lot of people to question everything. But here is what the data actually tells us. Bitcoin is maturing. It is transitioning from a retail-driven speculative asset into a global macro asset. And with that maturation, the timing of price moves is shifting. But the underlying supply mathematics have not changed one single bit. The halving still happened. 450 coins per day is still all that exists. The supply is still tightening. The institutions are still accumulating. The next halving is still coming in April 2028, and by then, the block reward will drop to just 1.5625 Bitcoin. What this means is that 2026 may be the year the delayed 4th cycle finally ignites. The fuse was lit in April 2024. History suggests the explosion follows. It just may arrive on a slightly different clock than before. And here is the pattern that every serious Bitcoin analyst is watching right now. After every single halving in history, without exception, Bitcoin has gone on to set a new all-time high. Every time, no exceptions. The only question has ever been, when and how high? So let's talk about what this means for you. If you are sitting on the fence right now, if you are waiting for a better entry, if you are telling yourself you will buy when it dips a little more, you need to understand something very clearly. You are not waiting for a better price. You are watching the window close. The next halving is April 2028. That means we are right now, today, in the accumulation phase of the fourth cycle. The phase that, historically, precedes the largest price moves. The phase where the people who understand the pattern quietly stack, while everyone else waits for confirmation that never comes cheaply. By the time the mainstream news is running headlines about Bitcoin's next bull run, the easy gains will already belong to the people who acted now. So what should you actually do with this information? 3 things. First, understand your number. How much Bitcoin do you actually need to reach financial freedom? It is not as much as you think. Use the Bitcoin retirement calculator at marketupdateshq.com right now. Put in your age, your income target, your current stack. Get your personal number, because accumulating without a target is just guessing. Second, use the cycle. We are in the accumulation window. Dollar cost average consistently. Do not try to time the exact bottom. The people who got rich from the 2016 and 2020 halvings were not perfect traders. They were consistent stackers who understood the supply mathematics and refused to be shaken out. Third, hold your keys. When this cycle moves, and history says it will, exchanges will get congested, withdrawals get delayed, platforms restrict access at exactly the moment you need it most. Your Bitcoin on an exchange is not your Bitcoin. Get it into cold storage now, before the crowd arrives. 3 halvings, 3 explosions, 1 pattern. The 4th halving has already happened. The supply has already been cut. The institutions are already buying more than miners produce every single day. History does not repeat exactly, but in Bitcoin, it rhymes, loudly. Go to marketupdateshq.com, run your retirement calculator, know your number, and position yourself before the next chapter of this story is written without you. I'll see you in the next briefing.